Everybody to the Hurley Investments market commentary of June 23rd, 2025. An exciting week we had last week. Bombs going off, literally. Just getting things set here. All right, so when was it? Saturday? Saturday looks like the Uncle Sam dropped a couple bombs on Iran's nuclear facilities. And that was pretty interesting. Closer to Sunday, we had futures prices on the market dropping. But as I was thinking about the whole situation, my thought was, hold on a minute. Didn't we just get rid of a nuclear war risk? I don't know. Maybe I need to read a little more, but I didn't hear of any casualties. All I heard was that they just blew up those facilities. And that was it. To where I made sure I was up and seeing what information was coming out of the news and ready to throw on more protection as needed early this morning when markets opened. And early in the morning before the market opened, things just started to come back up. And I think it was kind of cool to see the market for a change agree with my line of thinking instead of just going and puking their guts out and selling off and being a little bit irrational. I think there was, let's see, midday rockets were sent over to some bases that nobody was at in Qatar, the US bases, and nobody was killed, and it was more of a symbolic retaliation than anything, with Iran knowing they absolutely cannot, in any real terms, retaliate against the US, and they are pretty much in the pocket, and no real threat coming out of that situation, no real escalation. I think, Bill, it might have been you last time when we were going over those risks and things. Mentioned the what is it called? Hormuz Strait or whatever. Iran certainly can try to block things, but I don't think China wants anything blocked, and they kind of Strait of Hormuz. Thanks, Bill. It sounds like right now China doesn't want anything held up, and of course you got the all of the European Union and China and all the other countries coming out and condemning the attacks on Iran. But from what it looks like to me, that's all just for lack of a better term, a dog and pony show to say, hey, we don't want war. And really everybody's more relieved that Iran has no nuclear capability. Bill says China get 80% of its oil from Iran, and Iran need the income. To be a ceasefire in about 6 hours. Thanks, Bill. Um, yeah, I guess I'm just kind of pleased that it's kind of nice when the market seems more rational sometimes, because it often is not that way. So these are my notes I've had up from last time, and you see me kind of deleting things here and there as we've kind of talked about them. Haven't even heard anything about the Boeing plane crash. Let me just see what Boeing's looking like, and they look like they're trying to find a bottom at 200, which is nice. Which brings me, and we'll come back to Israel and Iran, maybe. But we have had the FOMC rate decision, which from last week, they chose not to raise rates, cut rates, holding pat. But, and that was pretty well expected. I think I said last time that we didn't get a rate cut in May, but uh, obviously we weren't going to get a rate cut in May, but I was misspeaking of April because that was one of the reasons that caused our kind of fall in April with along with the tariff issues, which was that yeah, April they didn't cut. So the market didn't necessarily expect a cut, I don't think, in June. Maybe some people did, and um, but I think the key was they said the reason we didn't get a big sell-off was Fed said they still expect 2 cuts this year. So the market held up. And I think I saw as well one of the Fed chairs or Fed governors say they're looking at hopefully doing cuts in July. Obviously, that's just one. Just sometimes you hear them one or two saying what they think, and that's not necessarily what everybody thinks, but I guess we'll find out what happens. I would think we're probably only going to get one rate cut if we get one, and it probably won't be till fall time. And we'll get a sell-off in August, September, as we usually do, when we find out we're not getting that cut when we want it. And then we'll have the typical fall sell-off and a rate cut in October to hopefully finish off the year nice. All right, back to Israel and Iran. Yeah, so the only worries now is Is Iran going to try and cut off Strait of Hormuz? Doesn't look like they will, as China will be a big pressure not to. That's as far as I understand. You try to learn everything you can about world geopolitics and everything, but there's stuff that you just don't really know about and know the details of, and this would be one of them. But I would think, using my brain, uh, Iran's not going to want to do anything China doesn't want to do, and I wouldn't think China would want to cause problems for themselves with the US. So, my 2 cents. Alrighty. Before we get into the big picture, which I wanted to briefly talk about, I wanted to talk a little bit about Google. Very nearly in the middle of the day, I was looking at Google, seeing it down here below the 50-day. I had put protection on Google last Friday as it broke the 200-day over here, and was looking at possibly adding short calls and to fully collar our Google shares. But after the Iran strike on U.S. bases or nearby bases or whatever that didn't end up killing anybody, the market slowly started to rise up towards the last hour, and Google held that 50-day. And you can kind of see this brown line that I drew here that shows that double bottom. And at pivot point, and pretty much held that to the penny. 165.19, 165.25 is the pivot point. So extremely close. And no, pivot points are not a big factor for us, but when it looks like their price movements are indeed holding and traveling onto those pivot points, it is one more little detail and probability that we look at. So, what on earth happened to Google? What is with this big drop? Does anybody know? Bill, are you saying Google saw Trump? No worries. Misprint. Okay. Anybody else know? And if you have to do a quick Google search, that's fine too. Why is Google kind of crapping its drawers a little bit? Okay, fine. I'll help you guys out. Oh, we got a comment here. Earnings? Not a bad guess, Lee, but we're not in earnings season. Usually that would be the right answer. All right, so let's look up. I like FinViz instead of just Googling because FinViz does a screener. If you scroll down here to the bottom after you type in your ticker, gives you basically everything on the internet that comes back from the company and ticker you're searching. But if you go back Friday, let's see, where was it? Where was it? This one's good enough. So Google got slapped by the EU with a $4.7 billion fine, basically because their Android phones made it nearly impossible for anyone using Android phones to use any other search engine besides Google, Chrome, I think, whatever it is. You guys can search and read the article. I'm just giving you the Cliff's Notes. Tony got it. Europe legal. Stuart, not a bad guess. Tony, 10 points to you, sir. Um, so they got slapped with a fine, and of course they're trying to appeal it. Why not? Uh, Anybody want to wager a guess just how important 4.1 billion euros is to a company like Alphabet? Sounds like a whole lot of money, doesn't it? I wouldn't mind $4 billion. I'll be honest. Stewart says not much. Let's see. Why don't we just Google? Why don't we just Google Alphabet Q1 2025 earnings report? So you would hope that Google's little AI assistant would give the correct information for their own company. And it seems as though this is correct. They made 90.23 billion in revenue from just one quarter. Seems like not much of a big deal, right? Just getting the notes on. All right. Looking at your comments. Lee said, apparently the market thought it was too much. Tony says it's more posturing and saying we did nothing wrong. Bill said, to us peons, it sounds like a big number. Yes. In the grand scheme of things, it is not a big number. So, is the market just irrational? Or is there something to worry about here? What do you guys think? Tony says irrational. They'll probably settle for 2 billion of books. Maybe so. Even if it's not, doesn't sound like a whole lot. But is this really why the market sold off a bit on Google? Are we really worried about or is the Mr. Market rather really worried about this 4.7 billion? Being played like a fiddle, says Tony. The EU is being played like a fiddle. Bill says it's only about 0.05% of the 90 billion earned. Yes. Obviously, it is not, this one thing is not a big deal in the grand scheme of things. What is the market more worried about? I'm going to say the market is sensitive about antitrust, antitrust. So if Google, Alphabet, loses a competitive advantage as a result of antitrust regulation, it could be a big problem for their future growth. So yes, you have one big sell-off on one day and coming back to a previous low, which is a support level, a 50-day moving average, and hopefully hold there and build a base until everybody forgets and something else comes on the horizon that helps, which would probably be any tech stock doing well. Obviously, each of them are different and make money in different ways. We do have Micron earnings coming up. A lot of the chip stocks have been doing excellent, and I would expect Micron to do no different. Um, Obviously, they're producing for a lot of the AI computation that's needed, which Google is a big part of. Could be a small boost there in all likelihood, which could be that little distraction. But again, today, holding last Friday, some big profit taking, right? So you got to look, I guess my moral of the story here is you got to look a little deeper. Yes, is it overblown? Of course. This is way overblown as a one little thing. But Google has been running into antitrust issues, not with just the EU, with our own government. And so the market is, again, sensitive about anything coming out about that because if they lose any competitive advantage of any one of their parts of their business, um, it can be a big deal. And it's obviously a big question mark still kind of looming over Alphabet's Google's head. So looking at it that way, a one-day sell-off makes a bit of sense. Still irrational, but we're also getting some support. Hopefully that makes sense. Everybody is always worried about future growth because current prices are built on the understanding of our current understanding of future growth. And that's why you get a one-day move like that. All right. I mentioned this a minute ago. Earnings, really the only thing we're looking at is Micron, which has their odd date earnings on June 25th. And then mid-July, we start to get into the general market earnings season. So I don't think I need to talk too much more about any other earnings. I did want to talk a little bit about our briefing, and they go over the Fed speak. I kind of wanted to talk a little bit about this section. And I also have to do a little bit of correcting from my last one. I think I said the Senate had passed the big, beautiful bill. I misspoke. Obviously, I meant the Congress, the House, rather. It's both Congress, but the House had passed their end of it. Obviously, then it goes through the Senate, and then the president has to agree with everything and sign his side of it. So it's still going through that regulatory process, and they're trying to. Trump wants it to get done for him to be able to sign on Independence Day. And honestly, it seems like there's so much garbage packed into these bills. They can't just do, a la carte, one thing here and one thing there. Most of it isn't even about spending, it's about other little pet projects. And man, all I'm gonna say is our federal government is just so frustrating. These bullet points I thought were a bit interesting. Um, Basically gives some thoughts on how to manage, or I guess passive investors, how to manage the risks in this part of the market. When we have all this stuff still looming overhead with the Iran conflict and one big beautiful bill, blah 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 blah. So what is one to do with so many loose ends left untied? Investors should remain invested, but be cognizant that total return potential for passive index investing will be restrained in the third quarter, given the starting point of a high valuation for market cap weighted S&P 500. Okay. For passive investing, and you guys know what passive investing is, but just in case there's someone here that doesn't, it just means you're buying one of the ETFs that follow the indexes, one of the S&P 500, the Dow, the CompQ, and they're suggesting that you go to an equal weight ETF because they would favor an equal weighted approach. They suggest just this RSP. But it doesn't really explain why. Equal weighted just means that it follows the S&P 500, but they take some money out of sectors in the market in the S&P that are overrepresented as a percentage of the overall ETF and the S&P 500, and they shift that money over to the other sectors so that it's quote unquote equal weight. And their thought is that this allows you to take profits on things that have run and also allows you to not be as tied to the risk of the S&P 500. On one hand, I think it sort of makes sense, um, specifically because we know the market has run up so much and there's so many question marks. Does that kind of thing their overall point? There are so many question marks about what happens in the future and of what our earnings going to turn out like, geopolitical issues, etc., etc., etc. But I'm going to say that if anything happens that the market doesn't like or any surprise, no equal weighted anything is going to matter or protect you or give you any sort of warm, fuzzy feelings when the market as a whole just goes down. So, no, I don't think that equal weighted ETFs are worth anybody's time. And another point is the fact that the eight big um, ultra cap companies, your Apple, Alphabet, Amazon, Nvidia, Netflix. Yeah, you could throw them all into the tech sector, but they're really not they're not the same sector and type of companies. Amazon's a retail sales type of thing, and Netflix is consumer discretion and entertainment and so on and so forth. But those seven, eight companies have, as we've mentioned time and time again, have been such a huge part of the market run up to all-time highs. And so again, I understand why they're saying equal weighted approach to minimize exposure to blah, 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 and the gobbledygook that every financial planner says about all this stuff. I get it. Um, but again, uh, on the upside, you're missing out on those companies still going up if you're turning to an equal weighted ETF, and you're still really not protecting yourself if it goes down. Might not go down as much, but again, when the market falls, nobody gives a crap. Everybody just sells everything. There's no protection except in puts, put options. That's your only protection. So, a long-winded way of saying this is a dumb idea. Let's see. Going forward, help mitigate losses in bad times, provide attractive long-term return potential. Yeah. They're saying this so they don't get in trouble with the SEC. Um, so here's some of their strategies of different stocks to look at to weather this circumstance. Dana Incorporated. Was that the yogurt? Somebody help me out. Auto parts. Okay. Auto parts. Maybe that makes sense. Price to earning ratios that are attractive growth wise. All right, so let's look at Dana. How far are they off of there? They're pretty close to their 52-week high. They've already run up quite a bit. Earnings per share, man, that doesn't look good. Sales are down. I'll give it to Briefing. They do have a low price to earnings, but that earnings per share does not look good. And they're closer to their high. I'm going to say no thanks on that one. High beta is what Bill says. Let's see. Oh man, you guys have been talking to me a bunch. I've not kept up. Let me catch up here. Vicky, I'm not sure where your comment came from. I think it was probably from Google. So sorry I missed that. Competition in the AI space. That might be one of the reasons, but I haven't seen anything specifically other than maybe what Meta buying some small AI company. Bill says, hi, beta. Where's their beta? Let's see. About double the market. Okay. Well, I would think some of the bigger gaping problems is this earnings per share and sales are down. Earnings per quarter over quarter is up quite a bit. Maybe they're starting to turn things around. I'm not terribly impressed with that one. Jewelers, don't care about that, especially if the the problem is consumer discretion's coming down. Uber, food delivery. Again, if people are going to be spending less on stuff like that, I'm not interested. Well, let's see. Briefing analysis, appliance maker. Oh, companies that are less exposed to tariff issues. Whirlpool, WHR. I haven't looked at these for a long time, but I'm assuming this is one that probably doesn't move a whole ton. Beta is 1.14, so it's not a huge mover. Multiple bottom, I like that better than Dan. It's also a more recognized company. Holy price to earnings ratio. Mercy and grace. Earnings per share. Sales. Yikes. No thanks. Costco, Visa, if you can afford those, beautiful. Costco, Costco is one of my favorite companies, but they are just they are a little more on the expensive side. And a couple years ago, what was it, 2020, 21, I think, we had done really well on leap long calls on Costco, and we really haven't done a lot with Costco since. And that was back when they were priced at like $500 a share, and now they're at 1,000. Maybe we should have stuck with some of those, but um, I think the moral of the story is there's hype has taken off and they've become just expensive, is all. Good company. Visa, great company. And again, just to highlight what we're talking about here, companies that are less exposed to tariff issues, everybody freaking uses Visa all over the world. They're big in Europe, they're big pretty much everywhere. Higher end for a credit card payment processing company. on the PE, but they are a bellwether, which is, I guess, what they're going after. Um, it's not Costco price, but not everybody can afford $300 per share stock. They used to do, I think, much higher dividend. They don't anymore. One thing I like to do with something like Visa is a covered call type strategy, because typically you will get a decent amount of credit and you'll have these spaces where it will just go sideways and up for a while, and you can book some nice little profits and on something like that. All right. Companies that are steady growers regardless of economic conditions. I I don't like utility or energy companies because they just don't move. Walmart. I actually like Walmart more for exposure to tariff issues, which maybe that's a surprise, but they have suppliers readily available from all over the world, and they're such a behemoth that uh, they're they're able to maneuver really easily around stuff like that. So I like that one. Robotic assisted surgery, ISRG. I actually opened this one earlier. ISRG. IPE. I forward PE. I do like that margin. Um, Here's where I'm a little less impressed with this company is their sales quarter over quarter, and the fact, with such margin and their sales not crazy. I mean, they're not the worst, but and we're already fairly high priced here. We've already had quite a huge run up, at least over a longer period. Maybe not so much this year. They're off their highs, which I like, but this is another one this is a $500 stock. So you'd be looking at option spreads or something like that, but this isn't one that I would think would take off in a crazy sort of way. All right. And yes, Google. Thanks, Vicky. Abraham, no debt. Which one were you talking about, Abraham? This one. Yes, I like that. Every once in a while, I like to just see what other people are suggesting and looking at. Um, and just skimming some of the numbers. All right, I think that's all I really wanted to go over with that, but I thought it was interesting. Um, my point here is please, when you read stuff like this, don't go and just throw money at it. There's always more to the story. It's easy for analysts like this to just throw out ideas. Super easy. They can make that an argument. Um, it doesn't matter. You got to do your own research. You got to look at it, compare it with things that you've currently have and good companies that you already know about. And to be honest with you, I'm not terribly impressed with most of the stuff they have on there. Um, this last couple of paragraphs. It isn't an easy period to forecast because of the range of outcomes for many key issues is fairly wide, but the market is priced for positive outcomes. There's nothing wrong with that, but it implies a lot of good news is priced in already, which makes further upside harder to come by and invites material downside risk if those positive outcomes don't materialize. All right, so my question to you guys is, if that's the case, if the market is already pricing in all this great news and there's more of a risk of downside if these positive outcomes don't materialize, why on earth are they suggesting things like equal weight ETF? Why doesn't this industry teach people about protecting shares? Maybe it's because, well, let me pose that question to you guys and then we'll kind of wrap up here because we're hitting our hour mark. Why do you think that the market advisors, why does this industry not talk about a tool that is readily available to everybody? Why don't they talk about using options? Why don't they talk about using puts to protect shares? Why is it that everybody just assumes you got to just go with the market swings and just hold your breath? Bill says too much work to figure out where and when to place puts or short. Yeah, I agree with that, Bill. Maybe it's more of a risk for them to just kind of publish these ideas. There's more. Stuart says there's more money in hype. Yeah, maybe this stuff that they talked about here, it's easier to just say whatever, just hype. Vicky says common thought is that options are risky. Yeah, isn't that interesting? And certainly people can do things that over leverage themselves, and it can be certainly risky. But that's all most anybody understands. They don't understand what options were designed for, and that is to protect using puts and insuring against losses, uh, using calls to insure against missing out on gains. I tell you what, I like what we're doing, and I'm certainly glad that we don't just do the typical thing and we're actively watching and looking for opportunities and actively watching to protect and um, weather these storms a little better than the market, the boilerplate investment advisor run of the mill thing. I'm going to say markets are probably going to end lower. I'm just betting that there's something that will come up in the midweek and will kind of just be either lower or flat. Technically, these indexes are still bullish, and these are I'll have to replace these with the updated ones, as those are the old ones. But let me just look at the S&P real quick, and I'll update those after class is over so we don't waste time. And that was last Friday, ended up, and we've just kind of gone sideways. But again, we're still technically on the bullish side, with especially with that RSI staying on the upper half. Oh, whoops, let's see. I always get this one wrong. On stock charts, it's Indu. Maybe not so bullish on the Dow, but still kind of fighting there, and peaked back above that 200-day moving average today, still on the upper half again of that RSI. And then on the NASDAQ, still very much bullish. So bullish all around. Where is our market going to end June? I'm still going to say -1% for the market. I think Micron is going to be awesome, and we are going to be up. Earnings, again, we just have Micron on the 25th. Economic reports, existing home sales was today, and that came in positive. Consumer confidence tomorrow, MBA, and new home sales on Wednesday. We have GDP numbers, which is obviously pretty important, on Thursday, and then more than that on Friday, with everyone still concerned with inflation. We have PCE prices then. So those turn out good, and maybe we'll have a positive end of the week. And that's pretty much it. Last questions, thoughts? Keep an eye out for the post. I will get this up. I'll have some different articles to go over, or for you rather to go over. I have not replaced the ones from last week, so keep an eye out for that. Any last questions? All right, guys. Well, not seeing anything, which means I've satisfied all of your questions and concerns. And you'll forever hold your peace until the next time we talk on, well, I guess Kevin will be back for next Monday. But all right, guys, that was fun. Thanks for listening to me and letting me babble on. Always a pleasure. And that's all I've got. Thanks, Abraham. All right. Good night, everybody. Take care.